Hello again, everyone. This is Joe Henches with Beyond the Chart, your source for exceptional video analysis of stocks, ETFs, and indices so you can become a better trader. Welcome back. And we're taking a look at a trade idea from August on Sandisk today. It's a trade idea I am calling Catching an Extreme Move. Here on August 14th, I had the trade idea, and it was actually in the morning. I should put AM here because that's when I saw that what was going on. And I put out a sell signal that says sell at 57.35. So let's look over in here. And this day right here is the 14th. And why am I selling at 57.35? Because it's one tick below the low of this bar. And so what I got was I got two consecutive closes below the 10. Okay, so you notice how the trend is pretty solid down. This is a 55-day, 233, 55, and 21. The Fibonacci numbers I use instead of 20, 50, 200. So I stick with Fibonacci numbers, depending on how you pronounce it. At the 10-day exponential moving average is my trigger line that I like to use for riding the short-term trend and getting on board. And so when I saw these two consecutive closes in here, my setup called for an entry, and that's where we got on this day. So you can see bought to open 3 September 60 puts at 395 asked. And again, this data is coming right off the Trade Ideas page that's available to my insider members on my website. And all of the trade ideas are conservatively shown at entering at the ask and selling at the bid. Okay, so you don't have to do that when you're actually executing option trades. Sometimes you want to because things are moving fast. You want to get in or out that fast. And if it's a highly liquid situation, then that's fine. But I do this just for conservative approaches on the numbers. Okay, so at the ask on the September 60 puts, so where's 60? 60 is right here, this dotted line. So it is an in-the-money option. And then it starts to roll over, comes down, and within a couple of days it hits target 1. And here, target 1 is listed right here, 55.43. You hit 55.43, exit one third of the position. And I say 1/3 because, maybe you bought 6, maybe you bought 9. It all depends on the amount of money that you're putting at play in any given trade idea. But I simply use 1, 2, and 3. I use 3 in here for this to keep the trade idea simple. Okay, so we exited 1/3 right here at 4.95, bought at 3.95. So not a huge amount of profit, but it's profitable. You're locking in some profit. Well, then it continues to come down the same day, and it hits target number 2, 53.51. So we exit on the very same day, 6.95, another $200 on the second option. So now we've locked it in. So now the situation is I've locked in 2/3 of my position at profit. I will not let the third one become a negative. The worst case is I will sell at break even at 3.95. Okay, have a stop at break even, that if the bid ever got to 3.95, I'd be out because I'm not going to let the third one dip into the profit I've already locked in on 1 and 2. Okay, so now it keeps coming down, and I decided to ride. In this situation, I decided to ride it because what I'd seen was Sandisk had a tendency to get outside the Keltner channels. These dotted lines are my Keltner channels around the stock price. And notice how it got to an extreme. Okay, so I decided to ride it and see what it was going to give me. So it starts to get to an extreme. It's getting outside the Keltner channels. So now we get down here, and so once I get 3 consecutive closes outside the Keltner channel like this, what I'm doing is I'm saying, okay, I am going to put my stop right above the prior day high. Okay, well, I probably ought to move this over a little bit. Let me back it out just so you can see the highs a little bit better in here. So you notice how, okay, if you put it 1 tick above the prior day high here, well, it didn't get hit here. And so I was watching it, and so what I said was on the 26th, which was for this day here, I said stop at 49.71. Well, why is that? Because it's 49.70 high. I was going to do 1 tick, 1 penny above it for a stop. Well, then it gaps up on me on the next day, but that's fine. We got out and sold to close at 940 on the 3rd. So look at the kind of profit able to lock in. Could have gotten a little bit more. You know, you're always going to have the ability to, you know, you could have gotten more or you could have got in low. I mean, you're always going to be in that situation. But I'm not going to complain about the fact that I bought it at $3.95, sold the third one at $9.40. So here's the three. Sold here at $4.95, $6.95, $9.40, total $21.30, and the initial was $11.85. So $945 worth of profit on the trade, 80%, 9 trading days. So that is catching an extreme move to the outside of the Keltner channels. All right, hope you found that helpful. Again, if you'd like to have this kind of detail that I'm providing insider members, go on over and check out, click on the link here on the video and head on over to the join page and check it out. All right, everyone, have a great rest of the week.